I know what you might be thinking. Hey, London, I don't have $10,000, right? I don't have $10,000. I haven't figured it out yet. I don't have that type of cash flow going into my business checking account on a daily basis, right? Or on an average rate. So here's what you're going to do. This is why I tell you, no matter where you are in your business, you can always start somewhere. Remember, credit is all about perception. Do you look good on paper so we can manipulate the system to look good on paper, right? It's all a game. Banks are rejecting your business credit because they don't trust you. See, you spent all this time building business credit, but what you should have been focused on is building bank credit. Did you know bank credit is more credible in the eyes of the lender than building business credit? In this video, I'm going to break down how to build bank credit so you can get these lenders to know, like, and trust you so you can secure the funding you need to start, grow, or scale your business. Now, imagine walking down the street and some random person stop you and ask you for a few dollars. See, in that split second, you analyze the situation. You realize you don't know this person, you don't trust this person, and you know this person will never pay you back. So immediately you answer, no, I don't have it. Well, for most of us, right? What if I told you the banks analyze your business in a similar way? So walking into some random bank and asking for $100,000 without the bank knowing, liking, or trusting you will immediately get you turned down. Are you tracking? So let's hop into it. What is bank credit and how can we use bank credit to get business funding? So bank credit is totally separate than building business credit. In no way it affects your business credit profile or your business credit scores. Because remember, banks only care about two things: your willingness to pay them back, which is based off your business credit profile, and your personal credit profile, and it's based off that data. So for example, do you pay your bills on time and over a period of time? That's your payment history. Or how well do you know how to manage debt? That's your credit utilization. Or are you constantly looking for a new credit? AKA, are you being frivolous or are you being thirsty for credit? They know that by looking at your hard inquiries. So those are some examples of your willingness to pay them back, right? Now, the second part is your ability to pay them back, which is based off your business revenue. So are you able to pay us back? Do you have the ability to pay us back based off your what? Your revenue, but more importantly, based off your cash flow. So bank credit is based off your cash flow. Basically, it judges how well you're able to pay your bills, or how well do you have the ability to pay your bills? How much cash flow you have coming in versus how much cash flow do you have coming out? Now, bank credit is broken up into three key components. Let's break that down. Then after I break this down, I'm going to tell you how you can build bank credit even if you don't have business income. So stick around. There's a bonus. Now, in order for you to effectively build bank credit, you have to have some type of income. You have to have some type of cash flow. Because number one, the first key component, and to break it down, bank credit is your bank account and its history. Remember, you're not in business until you have a business checking account. It doesn't matter when you start your LLC. For most lenders, they want you to establish a business checking account for multiple reasons we're going to get into. But your history really matters. Your longevity. How long have you had this business checking account? 6 months, 12 months, 24 months, 5 years, 10 years. That matters, right? Because business age is attached to that. Now, when you open up a business checking account, you don't want to close it for that particular reason. Leave it open as much as possible. I don't care how many bank accounts you have. Leave it open. Now, the second key component, which is super important, is your bank rating number. Your bank rating number determines essentially how much cash flow do you have coming in your business on a regular basis, right? Or on an average. So let me give you an example. Let's say you have $1,000 coming to your business checking account in the last 3 months. So in the last 3 months, you average $1,000. So you take the 3 months and you average that out, right? By using your bank statements. So now the banks are going to attach a rating number, a business rating number, to your business checking account. So for example, if you're bringing in $1,000 on average, you will have a low 4. Now to lenders, it's not good. Having a low 4, a bank rating number of a low 4, because you average between $1,000 and let's say close to $4,000. They're going to give you a grade of a rate number 4, low 4. Now where you want to be at is a low 5. This consists of having a bank rate number of $10,000. So this means you average $10,000 or more in your business checking account in the last 3 months. Are you tracking? And make sure you like, make sure you subscribe. And more importantly, if you want to get closer or get more of an intimate level, pause. Make sure you go follow me on IG. Now, let's get back to the point. If you have a low 5 bank rating number, super important, the bank will deem you as a good customer because the low 5 determines that you averaging $10,000 in your business checking account. Now, from there, you have a medium 5 or even a high 5. But banks like to see $10,000 or more in your business checking account. That's the second biggest key component, your bank rating number. The third biggest key component, do you have a relationship with this financial institution? For example, what products or services do you have? Do you have a business checking account? Do you have a personal checking account? Do you have a merchant account with them? Do you have a payroll provider with them? Do you have a secure business credit card? Do you have an unsecured business credit card with them? Do you have a term loan? Do you have a auto loan? So these are the things where you can build that relationship with the bank, right? Are you speaking with a BRM, business relationship manager? Do you have a relationship with them? It can go a long way. So those are the 3 key components that makes up your bank credit. Your business banking and its history, your bank rating number, and also your relationship with that financial institution can take you a long way. So start building bank credit. Now, I know what you might be thinking. Hey, London, I don't have $10,000, right? I don't have $10,000. I haven't figured it out yet. I don't have that type of cash flow going into my business checking account on a daily basis, right? Or on an average rate. So here's what you're going to do. This is why I tell you, no matter where you are in your business, you can always start somewhere. Remember, credit is all about perception. Do you look good on paper so we can manipulate the system to look good on paper, right? It's all a game. What do I mean by that? Well, let me break it down. In order for you to manipulate the system, you need a business credit card, right? An unsecured business credit card. So what you're going to do with that unsecured business credit card, you can write yourself a check for $10,000. This means you can liquidate that unsecured business credit card. So let me give you an example. Let's say you have a Chase credit card, $10,000 on there. You can write yourself a $10,000 check with 0% interest. So you write yourself a $10,000 loan and you're going to liquidate that card and deposit that money into your business checking account. You're going to let that money sit for 3 months. And guess what you just did? You just built bank credit. Now, 3 months is ideal, but let's say 30 days, 60 days, 90 days, but 3 months is ideal. Because once you go to that financial institution, once you walk into that bank and you know the business relationship manager, they see you have their product, they see you have longevity with them, they see you have cash flow in your business checking account, they see you have reserves. So now, not only they will approve you, but you will get approved for a higher limit. Especially if you're going for, let's say, an equipment loan or a term loan, or more importantly, an unsecured business credit card, right? Or even business line of credit. Not only you get approved, but more likely, again, you will get approved for more than what you think you get approved for if you didn't build bank credit. Now, in order to have an unsecured business credit card, you must properly structure your business. And more importantly, you must have a good personal credit profile. So the business owner credit must be in position. Now, what do you say? London, I don't have good personal credit. So how can I get an unsecured business credit card? Well, instead of starting with business funding, which I just explained what it is, your business and your personal credit put it together, that's business funding. Business credit is when you just leverage your business credit by itself, based off your business credit profile, it scores, and if your business is properly structured, now you can use that data and go get an unsecured business credit card with Sam's Club, right? That's the only card that's giving out an EIN without leveraging your personal credit or without having business income. So now you can liquidate that credit card and use it for bank credit. So there's multiple ways to get it, and you can go to other fintech companies and do the same thing. But it's all about strategy, at the end of the day. So I hope this video was very valuable. I hope you learned something about bank credit. So make sure you like, make sure you subscribe, make sure you go follow me on IG, Mr. London. Mr. London, right? I forgot to get out my IG, Mr. London. Go follow me on IG, and I will talk to you guys soon.